Hi everyone, welcome back to Be Rich. This is the second video. Today is a Sunday video, so I thought we'll do a little bit of a learner video. And me and Sashwath will talk about the difference between hedge funds and mutual funds. What is the big deal about it? Why do everyone like we spoke about Black Stone? There's another one called BlackRock, which I kept getting confused with. So I thought we'll talk about what is the difference between a hedge fund and a mutual fund, and what's the situation in India regarding hedge funds. So Shashwat, what is the mutual fund and hedge funds difference, man?
Yeah. So your mutual fund, most people at home already know, it's a basket of stocks which you can buy into at the price at which each unit of that basket is being sold at. And this is, you can buy into an actively managed fund where you have a fund manager and there's management fees and there's expenses. Or you can buy into a passively managed fund where there's no management fees and you have to pay a tiny fraction in terms of expenses, which will be 0 point something, 0.0 something. So that is your mutual fund. Mutual fund, very easy to understand. Most people understand it. Let's move on to hedge funds. Hedge funds is a bit more complex. The idea with a hedge fund is that they get to do whatever the hell they want, in the sense that they use a lot of leverage. Mutual funds do not generally use leverage at all because they're strictly mandated, especially in India, by SEBI to invest in a certain way. And they also have herd mentality or group action or group mind, which they do, which is that they mirror each other's portfolio and they mirror the index and they charge you a management fee regardless of this. So that's amazing. But so that's how these mutual funds work. But hedge funds, on the other hand, you're paying the hedge fund manager at you off the bat, you pay him a 2% management fee, which is already like huge compared to your mutual fund. And on top of that, you're paying your hedge fund manager 20% of whatever profits he makes for you. So you're really like being prepared to siphon off a lot of what your fund is worth just because you believe in this manager's ability to produce a return. And it's debatable. It's definitely debatable on whether it's worth it. And the thing which hedge fund managers used to justify this is by saying, I'll use leverage. That is, I'll use, if your capital is worth 100 rupees, I'll buy stock for 1,000 rupees. And if my stock goes up by 1 rupee, it'll be going up by 1 rupee on the 1,000 rupees, which means that let's say each stock is 1 rupee worth and it doubles. So your 1,000 rupees becomes 2,000 rupees, whereas in fact you only invested 100 rupees of capital. So your effective return will be 1,000 on 100, which is like 10x what you're investing. This is the ideal case. What should have been a 1x return would have become 10x because of the leverage. So, this is how hedge fund managers argue for their return. And they also say that we prevent downside losses. They say that we have insurance, we have puts which we buy. So, there's a lot of ideas which hedge fund managers use to justify the return, which not return, but rather their return. That is the cost which they charge on your fund. They use a
Correct.
lot of jargon and esoteric stuff to justify this. And so now let's look at this performance. And we have to return to our guru, investment guru, Mr. Warren Buffett, who has already done all this before. And he's had a bet with another person for, I think, $1 million or $500,000 or something like that.
No, million
It,
dollar,
and
million dollar bet.
$1 million bet. So that's like 7 crores, unfathomable, 8 crores, unfathomable amount
Which
of
they
money.
donate to a charity of their choice. I mean, that person, the loser's choice.
Yes, yes, and that's an unfathomable amount of money for most of us. So what Buffett said was, a hedge fund will not be able to beat a passively managed index fund, which is tracking the S&P 500 over a period of 10 years, I think. So it started in 2008 or 2007, and it was supposed to end on 2017. But surprise, surprise, the guy at the other end of the deal, Ted, his name was, folded in 2016 or 2015, saying, "I've already lost by all measures. There's no beating hedge. There's no beating a passively managed fund." So what was the outcome? The outcome was that the hedge fund returned cumulatively over the 10 years about 28%, 20 something between 20 to 28%, whereas your index fund returned 85% over the same period cumulatively. So 85 or 86, something in that range. So you've basically the index fund washed away the hedge fund completely. And this was after the 2009 crash, the great financial crisis, where the hedge fund actually fell by only 23%, whereas the index fell by a much larger percentage. But the index over the next 3 years made up that gap, and over after the 3 years, over 6 years, ended up completely destroying the hedge fund completely because of the 2% cost and the 20% siphoning off. So if a hedge fund didn't charge you 20% on whatever returns you're making and a 2% right off the bat, then you might have a different story. And it's a losing battle because your hedge fund is taking away from the capital. It's already saying, I'm going to take 2% away from whatever seed capital you have. Whereas an index fund is saying, no, I'm going to keep that money there. Let's see how much we can make on 100% of your capital rather than 98%, and then 2% of 98% being taken away, and so on and so forth. So he was really something which didn't have much of a chance, and that's what Warren Buffett said in his annual report. He said that there was no competition. He said that I won as soon as I made the bet. So that's what he said in his annual report, and it's true. And that's what happened. And in India, the hedge fund scene is not very prevalent, and this is because mainly because leverage isn't something which SEBI takes very lightly to. SEBI is very careful with leverage. SEBI is very careful with investor money, and I'd say overly cautious with investor money, where they've completely killed PMS. They took PMS to the gallows and hung PMS from this thing, and it's really a sad sight. So SEBI is overly cautious, and there's practically very little room for hedge funds to operate in India, sadly.
Yes, it's true. What Shashwat said is all point on. So what does it basically mean? Let's say talk in a layman's term. In layman's term, it's like, let's say there's a gambling den going on, a casino, and you find the best poker player, and you tell because you don't know how to play poker, so you find the best poker player and you give him your money, and you say, go play poker, and since you're so good at it, make me some profit. So the poker player says, all right, out of the first $100, $2 I'd put in my pocket. Okay, because you're asking me to do this for you, I must put $2 in my pocket. So $98 I take. Now, out of this $98, let's say I win another $98. Half of that I will keep as my winnings. Okay, because you don't know how to play, I'll win that remaining half for you and I'll give it to you. But of course, you'll have to pay the house, whatever the house tax is. That will be out of your profit also. Okay, so this is what we agree to. But if you lose the money, remember, this is poker. Some days we win, some days we lose. Remember that. This is the basically thing of a hedge fund. So so you have these high net worth individuals who have, let's say I have 100 crores. So 1 crore is meaningless for me. Or let's say I have 200 crores. 100 crores, I mean, 1 crore is meaningless to me. So what do? I just toss it to this guy and say, okay, play for me. This is what basically it is. So if that guy goes and he plays, let's say he manages to win the table. Sometimes poker players win. Couple of rounds he might win. Out of my 1 crore, I might get another 3-4 crores, extra pocket change in my hand. That's what basically happens here. It is high net worth individuals who have huge amounts of money which they don't know how to invest. They look for high risk investments because they can afford the risk. Because majority of their money is already invested in very stable, low risk avenues. And those avenues are generating so much of surplus of cash. These guys don't know what to do with it. So they take gambles, they take bets. And this is what basically hedge fund guys do. In India, like Shashwat said, it's very difficult to do any of this. It's very tightly regulated, and you cannot make these kind of bets as you want. That's why hedge fund players are not very many in India, and it's very hard to do it in India. And another thing is mutual funds have a lot of tax advantages. These kind of investments in hedge funding don't have any tax advantages in India, so you get taxed very heavily also. So net you lose in every shape and form. And at least you have to have 1 crore or above to even think of playing in this. And I don't think many of our viewers and you and me are lying around the table to throw into something like this and play and see what happens. The reason why we decided to take up this topic is not because we are encouraging you to do hedge funds or start a hedge fund. A lot of you wondered what is a hedge fund, how it works. So we thought we'll just talk about it. purely on an educational level what a hedge fund is. But we strongly do advise people to stay away from hedge funds, like Warren Buffett says, unless you are so wealthy and
That it
you have so
doesn't
much of
matter.
money. Yeah, then it doesn't matter. And I'm sure if that is the case, you won't be watching a channel called Be Rich, where we're
Very
trying to
rich.
make you rich. You'd be watching a channel saying, "You're rich. Go blow your money."
Maybe
We'll
we
be like
should start
Mr.
a channel
Beast.
like that too.
Yeah, like Mr. Beast. Take some trains, dump it in a hole, blow up some money, blow up some cash.
No, and
All
the
in the
funny
name of,
thing is, and the funny thing is, there are 100 ways to blow up your money, but there's only probably one or two ways in which you make your money. So
yes,
our job is easier, I guess, because we have to keep
correct.
hammering home the same thing again and again.
Correct. And let me also say another caveat. If you are someone who has a lot of money and you do have, for some weird reason, you're watching our channel and you can do something with your money, please don't gamble. Go do something for
Yes,
society. Start a school, help someone, help somebody. There are lots of people who need lots of assistance in this world. It will be very generous of you and kind of you to go help them out. Instead of taking
definitely.
gambles and bets on hedge funds or buying a Maserati for 2.5, 3 crores or buying a Bentley, there's something more you can do.
I mean,
Anyway.
I'd rather that you buy the Bentley than go and gamble with a hedge fund, because at least
That's
you
true.
would be enjoing the Bentley, but you would
Yeah,
be
here the
funding this guy's by Bentley by going
that's
and
true. That's very true. If you are going to fund someone who really needs the funding.
yes,
Anyway,
definitely.
we hope you found this video interesting and educational as always. Thank you for watching us today on a Sunday afternoon or a morning, whenever this was. Do turn on the bell notification icon and subscribe to our channel as always. And do leave comments down below on what more you'd like us to talk about and what are the topics you have any doubts or clarifications, then me and Shashwat could jump in, maybe try to explain it to you if we ourselves understand it. Thank you again
Definitely.
for
Yeah.
watching us on Be Rich.
Thank you.
I'm in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.